Hey guys, hope you're doing well. Just wanted to give you an update on how we determine the daily bias. Instead of teaching you how to do it, I'm just going to show you what I would see before I started it. All right. So as you can see right here, on the weekly chart, we closed bullish. And a bunch of you didn't understand what I meant. What I meant is that this was the place where there was a deviation. Initially, I thought the top was going to be 112, but it broke out from this range. So that's where a deviation happened. So what happens is that range needs to be retouched and then it has to go up. So as you can see right here, the retouch has happened on the weekly, right? So it means it is flipping the previous resistance into support and it's going to continue to go up. So what's going to happen this week is after a bullish weekly close, we're going to have a bearish week just to discourage you from buying this dip. All right. So as you can see right here, there was an imbalance here. That's where we broke out. And this is where the retouch happened. So it is bullish. So in order to close bearish, it has to go below this low, sweep the lows of this candle, and it has to go up. So our target is somewhere around here, 108, and that's going to be like a week. It's not going to be like a daily close or a weekly close. It's going to be an intra-week dip. So we need to be able to set limit orders in order to buy that. So how are we going to trade tomorrow? As you can see right here, this is where all the sellers came in, right? So this area is where the sellers came in. So what you need to do is to understand where to take profits. This right here is a bull flag, right? If you see on the daily time frame, it may look like we're faking out. Wait a minute, let me show you. So on the daily chart, it looked like we broke out, but it was a fake out, and then we came down, and again, and there was another fake out. It broke down, and we again closed above it, right? But if you see on the weekly chart, there was no fake out. The close was below the top of the bull flag, and the close was above the bottom of the bull flag. So we're still in a bull flag if you see the weekly chart. However, if you go on the daily chart, it may look like we're deviating, but we're not. All you need to see is on the weekly if we are on track. All right. So we are still on track, right? So when do we start shorting? So that's something that you need to determine here. So what are you going to do? You're going to go on the lower time frame and see how we're going to trade tomorrow. So it's right here. This is the path that I shared last week. That is was going to go from 120 to 112 that already occurred. So we're still going to short tomorrow from 116, which is the TGIF of last week. And it's going to go down from 116 to again, we're going to stop at 112. The range from 112 to 108 is a bit hard to trade. It's going to chop here for a bit, probably for a couple of weeks before it starts going up. I don't think for a couple of weeks, maybe a week. And it's going to start going up. So it's a bit tricky to trade that range. So you're going to like stop here, trade from here, and then stop 160 to 112. That's the range for this week. But when are we going to long? The answer to the question is always on the daily bias. So as you can see right here, the weekly closed above and inside the bull flag, right? So where are we going to start longing? Technically, this is the right place to long. 113, the one that I gave in the morning. But what's going to happen is there was an OT, as you can see right here. When it hits here, it's going to reject at Asia Open somewhere around 8 p.m. And it's again going to sweep the low of the daily candle. So this one is going to be the daily candle. Daily candle is not bullish. It is still bearish, but there was some buy pressure. As you can see, the wick is below the candle, right? So it means that there is still some buy pressure, but not enough. They're not aggressive. You know what I'm saying? So it's going to come down. It's going to go up and reject again. And it's going to sweep the lows of the candle, which is around 112. That's where the orders are at. And then it's going to go up, and it's going to go up and sweep the highs. And it's going to grab the liquidity and retouch the TGIF of last week. And it's going to reject. So sometimes the lows of the daily don't get swept. So what do? you have to be able to accept that it's not going to happen. And that's the reason we average. So we average at the lows from here to here and here. 50% of the candle is below the 50% range is where you start averaging. So when you do that, when there's a deviation, which can happen, all right? So you can't be right all the time. So when there's a deviation, what you're going to do is to accept the failure. Accept that it is wrong, but your damage is going to be minimal because you are always averaging within the discount zone. So when you do that, your damage is minimal. You're just going to take a small loss if it happens, all right? So that's the plan for tomorrow. We're going to wait until the liquidity below the daily candle is swept. And then we're going to long. We're going to target TGF of last week, which is 116 to 116.7. And from there, we're going to short it. And we're going to end all the shorts around here. Now, technically, we can still keep it until 108. That is on 8th of August. And 8th of August is an reversal date. And 9th of August is a full moon. So we have some confluence there. And I think that's where we're going to end the shorts and start buying in spot. And hope it's clear. And we can talk soon. Bye.